Renting can be a better option for many so that you don't become house poor. What is house poor? Well, it's a situation where owning a home stretches your finances way too thin, leaving little room for other expenses and savings. You may be saying, well, doesn't rent do the same thing? Not exactly. See, renting allows people to buy time until they can purchase a home, as there are many differences between owning and renting that hits your wallet differently, and I'll explain. Many argue that owning a home is the best thing you can do because a monthly mortgage payment in many scenarios is less than rent. And yes, that is the case in many scenarios, but unfortunately for many, that is usually where the thinking stops, and there is so much more to it than just a monthly mortgage payment that people put very little weight to. You cannot just compare a mortgage payment versus a rent payment. Some people only look at that and then tell everyone it's cheaper to own a home. Well, it's actually usually more expensive to own a home. For those that pay rent, the rent payment is the only expense that they pay once a month, whereas owning a home comes with a lot more expenses on top of the monthly mortgage payment. That is what people love to conveniently leave out of the equation. So yes, a rent payment versus a mortgage payment, the mortgage payment is usually lower, but add on all the expenses and that flips it to where owning a home can be more expensive than renting, and it comes with a massive amount of added responsibility. Those expenses include maintenance, and trust me, there's always something needing maintenance, from a light bulb going out to changing furnace filters to yard maintenance to painting, restuccoing. It's a never-ending cycle as a homeowner. I should know I own a home. Then there's the Homeowners Association fees. Now, not everyone has these, but they are spreading like wild weeds, and most new home developments will have them. These fees can range from $200 to $300 per month. I am lucky that I don't have one, but there are some yards in my neighborhood that do need some improvement, and that's where an HOA can be a good thing. Next, there's homeowners insurance, and that comes out to about $200 per month on average. Also, home insurance is increasing massively. I think I heard insurance companies raise home insurance 22% over the last year. That's insane. Now, yes, most renters require renter's insurance, but it's like $10 per month, a huge difference. Also, don't forget about property taxes, something that is also increasing at massive rates. Of course, this varies widely based on where you live. The average is about $2,500 annually, or about $200 per month. But this is usually baked into your mortgage that is paired up with your escrow account. So the two of these components, you have the property taxes and insurance, can be a part of what's called an escrow account. If you have an escrow account as part of your mortgage, part of your monthly payment funds that account, and then your lender pays your property taxes and homeowners insurance on your behalf when those bills are due. So it's pretty nice to have. Then the thing that gives homeowners nightmares, including myself, and that's fixing or replacing broken things around the house. HVAC system breaks? Oops, that's all on you. Toilet needs to be replaced? Well, you need to cover that too. Oh no, not a leak in your water pipes. Yikes, that's something you will have to pay for as well, and these can all be very costly, sometimes in the tens of thousands of dollars. And things do break. It's something that you cannot avoid. Renters don't have to deal with any of these costs should something break. Rather, the landlord has to take care of it. So when a home is yours, all those expenses are up to you. When you're renting, you're free from that added financial responsibility. So renting can be a prudent financial decision, providing the flexibility and financial stability needed to prepare for home ownership without the risk of overextending yourself. And many do prematurely buy a home and get into trouble than if they waited another few years to become more financially prepared. So if you want to buy a home, there are a few things you need to do. Number one, be debt free. Debt has been so normalized nowadays, it's very unfortunate, but I do mean debt free. Other than a credit card maybe that you pay off each month, a home will be the ultimate and highest debt you will have to tackle in your life, so why have other debt competing with it? Next, keep enough money in an emergency fund to cover 3 to 6 months of household expenses. Notice I did not say rainy day life expenses, just household expenses. So have 3 to 6 months of household expenses plus 3 to 6 months of life expenses. such as non-household expenses like medical related scenarios. This one is more of your rainy day fund. Having these savings will provide you the cushion needed to fix something when it comes up, but still be able to live without cutting into your disposable income. And then a suggestion is never take out more than a 15-year fixed rate mortgage. You will pay a heck of a lot less in interest than a 30-year mortgage. Imagine a $300,000 loan available at 4% for 30 years or a 3.25% for 15 years. The combined effect of the faster amortization and the lower interest rate means that borrowing the money for just 15 years would cost $79,441 compared to $215,609 over 30 years, or nearly 2/3 less. That's a big difference. Can you imagine paying a couple $100,000 less just because you went with a 15-year mortgage instead of a 30-year? It makes that big of a difference. Lastly, I suggest making a 20% down payment to avoid paying private mortgage insurance. That PMI is a pain and sticky. Trust me, there are a lot of stipulations with it that make it almost impossible to get rid of. So if you can do all of those things, then by all means, you're in a position to buy a house now. And don't wait for interest rates to drop. If interest rates drop, house prices will go up. It's always a balance. And you can always refinance when interest rates are lower. Also, consider other benefits when renting, especially in communities like apartment buildings, as they have better amenities such as pools and gyms and provide a community of people with similar interests. And that can be something that really fulfills you. Also, mortgage really is just a fancy word for paying rent for 30 years to the bank, hopefully only 15. And most buy multiple homes in their lifetime, so essentially they always have a mortgage payment, a rent payment to the bank. So in that case, renting is better without all the headaches. Food for thought, it's always beneficial to buy a home that you will live in for decades and eventually pay it off, especially with that 15-year mortgage, because if you are one to get pressured into buying another home because you get it in your head that you need to do so, then I don't think home ownership would be best for you. So a quick fun comparison. Now, every area of the country has different prices. The market's different. So I'm going to take where I'm at here in Albuquerque, New Mexico, and I took a small area of the city, and we're going to do a comparison of a 3-bedroom home, about 1,500 square feet, between renting and owning. So the average rent for a 3-bedroom home in Albuquerque, in the area I looked at, came out to $2,300. Add renter's insurance for another $10, and that comes to $2,310 for total monthly rent expense. Now, if you were to buy the home, the average mortgage in the area is around $2,200, and that does include insurance and property tax. So you can already see renting is higher by $100 than the mortgage. But if you add in an HOA at $200, let's say maintenance at $100, repairs at $100, so that's $200 total for maintenance and repairs, which comes out to $2,400 a year, which I'm going to tell you, when I researched this, there were estimates that you'll pay up to $16,000 a year in maintenance and repairs, so I'm really lowballing it here. This all adds up to a total monthly mortgage expense of $2,600. So here we see it as roughly a $300 per month savings if you were to rent instead of buy in the scenario here in Albuquerque where I live. Of course, every place is different. So as a homeowner, you pay more and have more responsibility. Renting is a good option for many, and especially for those that do not want a long-term commitment. I see a lot of people these days just moving around, and so owning is not for that situation. If you're going to be jumping from house to house because you want to move cities, you're changing jobs, etc. I hate when I see someone pressure others into buying a home when they are not ready, as that can chain them and prevent them from their own goals. Yes, a house is an asset you own and slowly own more and more of as you pay off your mortgage, but it is still a rent you pay to the bank, and you hold all the responsibility. I also see people buy way too much house than needed, and that can be a huge mistake as well. So really, I am saying that renting can be a great thing. It's not something that you're wasting your money on, as everyone's situation is different. And renting can be a tool used to eventually buy a house with the confidence you can afford it and all its variable costs. There is a lot to consider, but at the end of the day, you want to avoid being house poor, where you're struggling to cover all the expenses of owning in a highly stressful situation that can ultimately be financially prohibitive to your future. Let me know your stories of being house poor. How did you handle it? Maybe how did you come out of it to help others on this channel do so as well? Do you think renting or home ownership is superior to the other, and why? I wish you all well in your financial journey. We will see you soon for more financial knowledge right here on Mark Arnold's Finance. Have a good day.